traders, Gary Wagner here. Approximately 11:43 in Honolulu, 4:43 in New York on Wednesday, 22nd day of December 2021, and this is the daily report for gold and silver. Both the precious metals markets as well as U.S. equities showed solid gains today, with gold surging past 1,800 and is currently fixed at $1,804.60. That is a net gain of $15.90, or 0.9%. Silver futures, basis the most active March contract, is currently up about 1.3%, a net change of 30 cents, taking the most active contract to $22.83. And although the dollar is still currently near the upper end of the highs of 2021, the decline today of 0.4% or 41 points definitely created strong tailwinds for all of the precious metals. U.S. dollar index is currently fixed at 96.07. Unquestionably, gold and silver had nice, strong upside moves today, with gold closing just at a current resistance area. That is the 61.8% Fibonacci retracement at 804.60. Currently, we have gold futures fixed at 1804.70, up $16 on the day. There is a couple of very noteworthy things that I do want to discuss. And the first thing is we created a compression triangle by fixing a couple of lows that came in August and the end of September, and we extended the line forward. Of course, this was part of a compression triangle that we identified from the lows that were created both in August as well as the end of September, and then carried that line forward. What is interesting to me is that when we carry it forward, this support line continues to give us valuable information. We had a price surge just to $1,800. That occurred the day after the conclusion of the FOMC meeting. The following day, we hit this intraday high, which took gold to approximately $1,815. We've identified this particular price point as a point that has occurred on multiple occasions over the last couple of months. And as the market traded lower, what we can see is that yesterday's candle had a close that was just above this important support line. Today, gold prices opened at the support line, broke through 1,800, that is the black dash line, however, fell short when it comes to this first resistance level at $1,804.60. That puts major resistance at $1,815. We have converted our daily candlestick into a Japanese average or Henkin-Ashi chart, and even with today's strong moves, when we view recent price moves through the eyes of a Japanese average chart, we can see alternating candle color, we have no large bodies, and we have typical volatility that is created in pre-holiday and holiday trading, which has significantly lower volume than normal periods of trading. When we view gold pricing through a three-line break chart, which we have just put up, we can see that unlike the Henkin-Ashi chart, we can absolutely see the potential for a bullish trend developing in gold prices. This last chart that we are looking at for gold is a weekly candlestick chart. What we can see is that it does appear as though, although we still have one more full day of trading left, that we will get 2 consecutive weeks that resulted in gold closing higher when compared to the open on Monday. And that's going to really break this downtrend where we had 4 consecutive red candles, all diminishing in size, body size, prior to this major move from these lows at approximately 1750 up to the highs of $1,815. And the same trend that we are seeing developing in our gold chart can be seen in silver. This is a weekly chart of silver futures. Obviously, they both had 4 consecutive weeks in which we had lower lows, lower highs, and in terms of the bodies, they were red candles, meaning that they closed below the open. We had the bottom that came in here in silver at approximately $21.40. That was last week. And then this week, we have had solid gains with a higher high, a higher low, as well as a higher closing price. We are looking at a daily candlestick chart of silver futures, and we are currently pegging our major level of support at approximately $22.38. That is the 23% retracement level. When we look at our new data set that we put in yesterday, which begins at approximately $25.50, down to these lows at $21.42. We've had a continuation of that, and we still are looking at our first level of potential resistance coming in at $23. I am obviously rounding this up, with resistance then occurring at $23.50, and just shy of 24 is still where I'm looking at a top target. That is the 61.8% Fibonacci retracement level. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.